So, welcome to this live webinar on SB Trade Desk, guys, for intraday trading strategies. We are on tap for durable goods, which is supposed to be out right now. We're going to wait to see, looks like a little delay on that front. Durable goods expected a print of 0.3% off a previous read of negative 0.7. So it looks like we have a little bit of a delay here, but we'll keep our eyes on that one as we go through. So we'll go through some of these setups, guys, that we've been following on the intraday trade strategy page. I do want to answer as many of your questions as possible. So if you have any trade setups or questions on strategy, do feel free to throw those out. Okay, it looks like we've still got a delay here on durable goods. Okay, it says delay due to the late U.S. Fed government opening. Same for new home sales later this afternoon. Okay, so it looks like we are on hold, guys. I'll keep that on the side of the screen here. Okay, here we go. Negative 3.4%, weaker than expected for the dollar. Initial reaction, you're seeing the euro pop higher, Aussie pop higher here. Let's take a look at what those pairs are doing at this point. Here's the sterling breaking that confluence out 51.50, 51.35. Next topside objective is going to be 52 on that. Dollar CAD rather benign, dollar Swiss rather benign, Aussie with a little topside pop here as well.
U.S. December capital goods new orders non-defense X air falls 0.6.
Okay, and here's the rest of the print guide. Negative 0.8% for X transport, expecting a print of 0.6. So weaker across the board on all durable goods. In fact, non-defense comes in at negative 0.2. So weaker capital goods orders across the board here. It does look like the dollar is taking a little bit of a hit versus some of its major counterparts. Not necessarily a play right here. As far as exposure is concerned, guys, as a quick disclaimer, I'm holding a short sterling CAD. We'll go over that in a moment as well. Oh, I'm not sorry, not sterling CAD, Aussie CAD. But in any event, let's jump right in. So we've still been focusing and following the dollar yen. Yesterday's post did show us holding right at that 118.47. In overnight trade, you got a quick blip above this, but there was actually a nice trigger, which I'll show you in a moment, that opened up the downside targets. 118 was the initial target, 117.74, and we're now pushing through that. Here's what dollar yen looks like on the intraday. Okay, so a trigger that I actually don't show you guys very often, aside from the sloping or angular triggers that we use in momentum to get these positions in play. Here's a trigger that panned out last night. Okay, typically we don't work too much with horizontal triggers in momentum, but when you see a trigger like this, guys, as price action continues to push into new highs, you have 4 tags of support. That's going to be a conviction trigger. The break to the downside gave you a very nice stop right against the session highs, and that one continues to pan out. As a disclaimer, again, I actually had a limit right here that took me out at 118, so I wasn't able to play the rest of the trade here. If this downside break here is legit as we head into the open of U.S. trade, you're basically looking for 117.35, and more importantly, last week's opening range low, which comes in right above 117. So that's sort of the game plan here for the dollar yen. Again, as far as the resistance triggers are concerned, as long as we hold below this plane, which has 3 tags now, we'll continue to favor the short side here in dollar yen as planned. Questions on that setup? The broader picture for dollar yen still looks like this as far as the daily is concerned. We're still in this consolidation. You guys might have seen a piece on Daily FX yesterday by my colleague Christian Kerr, who's also looking for this consolidation break to finally give us some resolution. Remember that these triangle breaks or these triangle wedge formations are typically continuation patterns, not terminal. So at the end of the day, we would expect a resumption of the broader trend. That being said, I still think you can make a run here past that 117 on this move. Any questions on dollar yen before we move on? The major event risk for all the dollar crosses, guys, is still on tap heading into tomorrow. Okay, we do have, obviously, the FOMC interest rate decision. There's been a lot of chatter on what we'll see there, if there's going to be any shift from their tone on the back of the massive easing that's being undertaken by the ECB. That being said, obviously all the dollar crosses tomorrow will be in primary focus. We'll have the room open here for the intraday trade strategy during that release. I'm sorry, at the 8:30 print, before that release rather, to give you guys a little bit of a heads up on what we're looking for as we head into the actual print. Later in the week, event risk does surface again for the United States with the fourth quarter advanced GDP print. Off the previous quarter, which had a 5% read, certainly that's going to have an impact on dollar crosses as well. Okay, so dollar yen, our bearish invalidation level at this point is going to be brought down to 118.09, 118.04. And we'll continue to favor selling rallies well below this threshold. The conviction trade, by the way, guys, is going to be with a break below 117.35 that I noted earlier, as that is also going to be representing the weekly opening range low. All right. So that is the dollar yen. Okay, moving right along to the Aussie Cad. I actually have a position on this one right now. We'll see how it pans out. This is what we were looking at to start off the week, guys. If you remember, the topside break here, we're looking still to sell these rallies below the 99.28 barrier. For the Aussie Cad, the support barrier that we came into on the daily, here's the daily looks like, or the resistance rather that we came into on the daily last week was pretty important. It's a 2013 trendline resistance that dates back to the highs. And then also last year on the April advance and the August-September advance, we made some more tags. The stretch came right into it. So while we're below 99.28, you still think this thing could give us a little bit more of a pullback to the downside. Here's what the scalp looked like since the start of the week on the intraday. Okay, so obviously this break, as we noted yesterday, actually shipped the upside bias into play with the break of the Asia Pac opening range. Looking for short triggers never panned out, guys. This is actually right on the report yesterday. Didn't really give us a break to the downside. The break happened here. And why this one was a little bit trickier was that the break was actually not coincided with any type of move in price. Okay? The actual subsequent high that we made gave you a divergence. So price action making a fresh high into that key resistance level we just talked about. The oscillator making a lower high. And really I'm waiting for this break sub 50 and push sub 50 to give us a turnaround in this pair. Okay, I'm actually holding a short, guys, from right around, let me tell you the exact level. It's right at the 99 handle, so we're about 10 pips up at this point. And that was, again, based on the divergence signal, and then this break below this trend line put us in short against this high. So we're looking to see if we can get that stretch. You might see this thing give us a little bit of an interruption right here at the swing highs that we made yesterday, which were at 98.65, but the target on this one is going to be 98.40. Tiffany, great question. I do want to ask you to give me a little bit more clarification on what you're looking for. So Tiffany says, morning, yesterday you mentioned timing over in daily FX. Would you mind touching on that again? And also, can you state which times you consider the opening ranges? Sure. So Tiffany, for the opening ranges of the session, you're typically looking at the first hour to hour and a half. I don't want you to necessarily stress the time period per se, Tiffany. What you're looking for is essentially the market to set a high, a low, and retest one of those within the first hour, hour and a half. For the United States, 8:30 is when the futures markets come online. So typically that 8:30, 9:30 hour right ahead of the opening of the cash markets will give you a nice range you can use for the opening range. As far as Europe is concerned, typically I'm working from the 2 to 4 range here, Eastern in the AM hours for the United States. Typically that'll set the range for Europe. Heading into Asia Pac, you're looking basically from 7 to 9 o'clock during those hours, hour and a half, 2 hour span. You look for the market to set a high low. The point being is this, what I was mentioning yesterday in the Daily FX webinar is that when you're looking to jump into these positions, time of day is absolutely paramount. Okay? So when we're looking to take, for example, an opening range break for a session, let me see if we can find an example here for an opening range. Okay, this is a perfect example right here. So right around 8 o'clock, 9 o'clock, you're opening the range for Europe. Okay, The opening range high came in just around that 98.86 was the resistance level. You pushed into a new low. Actually, let me bring this, Tiffany, into a closer time frame so you can see this a little bit clearer. Here's a 5-minute chart looks like. Okay, so the Asia Pac markets come online. You set this high. You press into a new low. You come back and check the high, and it holds. Okay, next couple of minutes, you plow through that. A break of the weekly of the session opening range high for Asia. Okay, comes back. You're not going to get the stretch on the initial pullback, on the initial break, right? But when we come back and check the opening range high, holds its support, this is where your entry is. You look for a late session high for Asia Pac. Okay, there is an indicator you can get. It's called time sessions or trade sessions. Trade sessions, right here. Tiffany. It's actually a pretty neat indicator you can get. I think you can find it at fxcodebase.com. What this does is it'll actually highlight each session for you right on the chart. Now, it's not going to map out the opening range high and low, but it's certainly going to tell you the range for that specific session. So here's the Tokyo opening range. Like I said, this was the high. You press into a new low. You check the high. It breaks. You check that high as support. That's your entry. You're looking for a late session or mid-session high. And this happens, across the board. It's going to be the strongest strategy, Tiffany, when you're using it in trending markets. Flat or lateral markets aren't really going to give you too much of a break in the opening range. Again, not something that you want to hold through the entire session. So just because the opening range broke to the top, you're not looking to close at the highs. As you can see, we posted that high right in the middle of the session before we pulled back. Inevitably, we did push or end the Asia Pac session near those highs. But this just gives you the directional bias for this session. So after this break, we're looking to buy dips in price. So this would have been the first entry. Even on the second entry here, you're looking to maintain that upside bio. All right. Tiffany, does that make sense? Does that offer some clarity? I'll go through some more examples as we go through the scalps that we're reviewing today. She says, got it. Thanks. You're welcome. Right on. All right. So this is the Aussie Cad, and again, like I said, we're still holding positions on this. We'll look to see if we can get that stretch into 98.40. The way I'll play this one, by the way, guys, if we do see a break of this Asia Pac low, or this is the European opening range low. If we get a break below this, I'll be inclined to bring the stops down to break even, and we'll see if we can get that spread into 98.40. Tuttle says, it looks like there's a pitchfork from the first 123 low. Could be. Tuttle, you've been on point with these lately. Let's take a look. Yeah, I could work with something like this, Tuttle. I don't see too much benefit, by the way, just as a side note here, of stressing the pitchforks when basic trendline resistance and support will do. So I think you're right. I think on near-term price action, you'll actually see some nice pivots on this. Tuttle says he tweeted an image. Okay, you're using a wider set. Right on, right on. Let me see what you're looking at here. Yep. I'd actually be inclined to use this. It's just a little different from what you have drawn there, Tuttle, on your 30-minute chart. But I'd be more inclined to use this this one that you see here in blue. So we'll see. It still puts pressure on this near-term support at 98.86. We'll see if we can kick through. Not bad. Not bad. So, Tiffany, hope that helps. Again, we'll see how this pans out. Remember, it's a 27 pips is a quarter of daily ATR, so if you are in this one, that should pretty much govern your profit expectations per scalp. And that, my friends, is the Aussie Cad. Moving right along through the setups we've been following here. Remember the bearish invalidation. We're going to leave that steady at 91.12, 91.23, this region right here that we came up against. Kiwi yen. It's been a snoozer. I think the opening range is pretty much clear and cut for the week. We just need to see a break of this to get the directional bias. You know, our preferred play here is still to take a break of of support, or to sell rallies to remain that, or to stay on the bearish side of the scalp bias in general. Here's what the Kiwi yen looks like since last night on the 30-minute. So if you recall in that report, we were looking for the opening range between 87 and 88.25. Okay, actually 88.25 is right at the high today here. So that's sort of the range that we're looking for the break. If we do get the short side break below 87, remember the daily chart here for Kiwi yen is pretty telling. Okay, nice major support. These are my favorite support objectives, guys. At 1618 off the high, confluence of the 618 retracement off the low. Downside break below this, and you're essentially looking for a run into 86.30, which is going to be a longer dated 786, and the close low for August and May. Certainly, as far as the targets are concerned here for Kiwi yen, looks pretty good. So with that in mind, the scalp levels haven't really changed. Haven't taken any positions on this based on a couple of things, guys. This is what I don't like to see. Okay, you had a nice trigger here, which actually did give you a topside play. It broke the Asia Pac opening range right in the Sunday open and went right into the 88.25 level we noted last night. Now remember, this actually fills the gap. So the gap has been filled. And at this point, the focus is on the 87 support barrier, opening range low for the week, and that 88.25 level, which is the opening range high for the week. On a broader scale, I just want to show you guys what this looks like on a broader scale. Okay, the slope of this pitch line right here, if you mirror that slope to the high, that you made for that December stretch, you can see some nice pivot action here, and the actual slope holds true with that low that we made to start off the week. On the momentum rally here, exact hold at 60, exact hold at 60, break here below 40 keeps the downside bias in play. All right, so nothing's really changed here. Still looking to sell rally, still looking for support triggers to get us on the shorts. No plays this week as of yet, though. Tunnel says I didn't try that. That is helpful. Oh, you're talking about the pitchfork for the Sterling Cad. Yeah, right on, man. I do like what you have drawn there. Sometimes it's best just to work with the actual definitive slope. So I do like what you have there. I just think the fit is a little bit better on the one we just drew. All right, so Kiwi yen, we'll keep you updated on the squawk box if we do get involved in this one. Still favoring the short side here near term. Let me just check something out real quick, by the way, guys. Okay, keep in mind, I just wanted to double check. Keep in mind, as far as the Kiwi is concerned, we do have the RBNZ interest rate decision. That's on tap tomorrow afternoon here in the United States. This is going to be the biggest event risk here for the Kiwi heading to the end of the week. Tiffany says, yes, from what I heard, of course, somebody walked into my office at the same time you were talking, but I think I got everything. You are recording this, right? Slow typing on my phone. Sorry. Yeah, Tiffany, no worries. We are recording, and this will be archived shortly after we complete the webinar here. Okay, moving right along with the scalps we've been following. We went over Aussie Cad, we went over dollar yen, we went over Kiwi yen, and Sterling Cad is the other one. So guys, remember this one, the major region that we talked about last week was 87.96, basically the 88 handle to 88.30. And our premise was to see a hold here. Okay, it was a major key resistance. We've been playing the upside for the last couple of weeks in Sterling Cad, looking for a high. Well, in overnight trade, that invalidated our trade idea with the break right through that region. Now, we didn't make much progress, and the next topside target is 90, but price did push through this. So I'm still on the sidelines, actually, for Sterling Cad. I haven't been able to jump into a short with any conviction. Here's what sterling CAD looks like. First on the daily. Okay, remember this chart was on the scalp log last week, guys. And the premise was this region right here, the upper median line parallel from the ascent off the September lows, came right in line essentially with the 2014 stretch highs. Okay, and you saw some nice wicks there give us a reaction to look lower. The invalidation level for the trade, if you recall, last week was 85.18. Okay, and as he headed into Thursday or to the Friday, he came right in the tag of that and pressed higher again. Okay, long story short, guys, this was the bearish invalidation level on a closed basis. Okay, now that we've popped through, you essentially look to stay constructive above that same region. So above 86.70, you look to play the long scalps here in sterling CAD. The reason I haven't been able to get comfortable with that is because the momentum on the daily scale is coming into resistance. So another one that's a little bit, what's the word? A little bit frustrating for me, at least, to get involved in right here. It is a healthy wide range scalp, guys. You're looking at 185 pips per scalp, so you do have that flexibility. Here's what sterling CAD looks like on the intraday. All right, so the break not giving us a run, momentum failing to hold above 30, collapse right below in the momentum signature. Price, not so much. All right, not so much. So unfortunately, I think you need to be on the sidelines here for sterling CAD until you get that definitive move. I think a lot of this is largely due to the pair that we're looking at. You know, you saw that the British pound here today, if we take a look at the individual counterparts, seeing some strength, right? Dollar CAD today, rather benign, seeing some CAD strength as well, a little bit since that print of the durable goods. So I'm not really surprised to see sterling CAD sort of struggling to make anything. Looks like the pound gains are obviously outpacing that of CAD. So we'll sit on the sidelines here for sterling CAD, guys. I'll be more focused on the Aussie CAD position that we're in. Dollar yen, sterling CAD for me. Be interesting once we get into the 190 handle. 190.10 is a nice confluence area with the upper median line parallel today. I'm not sure we get that high. But bullish invalidation at this point is still going to be 86.74 sterling CAD. Questions on the pound versus the loonie? Tuttle saying, isn't the sterling Kiwi a better opportunity? Could be. Let's take a look. Specifically now with what we're seeing as far as the Kiwi strength, or the Kiwi weakness rather, and the pound strength, yeah, you probably find a nice move there right now. Here's what sterling Ki looks like today. Okay, so we didn't quite fill that gap from the Sunday open. Okay. I think you're right, Tuttle. The only thing why this wasn't on my sort of watch list today, this week, was because of the critical resistance that you're coming into. I'm still not comfortable with the long side of this trade until we close above this region. This represents the high day close, okay, for 2014 January trade. There was the high day, the close of that session, right there in the middle of that confluence range between 203.10 and 203.60. You have a basic trendline resistance off the highs from September. And now that you bring it up, we are going to clean this up a little bit. Bear with me one moment, guys. Just want to see what a basic retracement off the high looks like. 618 at the resistance. Okay? So there's a couple of reasons here that you'd be cautious about trying to play the upside, at least for now, as this holds right here. Do you know what I mean? You can easily see a scenario where this thing peaks into a high. You see some sort of decent Kiwi pullback or a sterling reversal, and this thing comes right back to offer a better opportunity. Also, the other thing I want to look at, Tuttle, and something that we like to keep in focus at all times, is what the momentum signature looks like. If this downtrend is to remain in play, momentum's at 60. This is where you'd expect to see momentum start to turn over. So for me, this is a little bit more precarious at this level that we're at right now. He says, since the gap wasn't filled, is that gap level an estimate of 50% of the move up? Since that gap wasn't filled, is that gap level an estimate of 50% of the move up? A breakaway gap, what you mean? Yes, Tuttle. I'm sorry, I couldn't get your question there, but yeah. This is your definitive breakaway gap. Listen, breakaway gaps are even more, what's the word, readily identifiable when the actual breakaway takes you out of a technical formation. Okay, whether it's a descending channel, whether it's a wedge break, triangle break, even a head and shoulders slice break, whatever you want to call it. When the breakaway or the gap happens to take you out of that range, this is going to be absolutely, your breakaway gap. So on average, right, just as a rule of thumb, the fill of that gap is where the main key support near term rests. Okay, and that essentially takes you to 20080. Tuttle, does that make sense? So for the near term, that's sort of your bullish invalidation level. This is probably a great opportunity. I don't want to steer you guys away from it. Just for me, I've already missed the initial push. I want to see the close above this region. In fact, let me do this, guys. We don't need this 100 anymore because that's actually sort of out of date at this point. So we're going to go ahead and highlight this region. Okay? And the close is going to be paramount. That's what we're going to need to focus on here. Let's see what the intraday looks like for Sterling Key. Here's your weekly opening range, or here's your weekly open, rather. Okay, it looks like we had this set up on the demo, but we didn't have the daily set up as much. So here's that 618, 203.67. Near-term confluence with the upper median line parallel. This is off the ascent from the January lows so far. Yeah, and this actually was a decent trigger we just got after a turn ahead of 40. So actually, this is a great lesson, guys. I'm going to do this real quick. Bear with me real quick. Here is our Aussie Cad progressing nicely. Okay. Okay, so this is just something I want to point out to you really quick, guys. This is a primary example of where you want to be cautious, and it's for a couple of reasons. I don't want this to... Okay. A, this is a scenario where you see in real time the reversal of the broader trend being manifested in the near term. What do I mean by that? So if we look at the momentum signature here for Sterling Kiwi over the last couple of months, it's pretty bearish across the board, pretty clear-cut bearish, right? Since the high that we made in early September, you got 60 hold resistance, 60 hold resistance, 40 break bearish, turn ahead of 60, 40 break bearish. So you'd expect resistance here if the broader trend is in play. Near term, though, on the 30-minute chart, it's the exact opposite. It's the exact opposite. Since the lows you made here, okay, this is earlier in the month, you broke through, 40 hold, 60 break, 70 break, that's looking higher. 40 hold, 60 break, that's looking higher. 40 hold, 60 starts to wane, 70 break and a 40 bounce keeps the upside in focus. So while this has largely been bearish and is challenging the reversal of that bearish trend, this has largely been constructive. And on this type of signature, you want to be utilizing these topside triggers. They actually all panned out rather nicely. All right? So it certainly is progressing, and I would be much more comfortable on a break and close here above 203.60 today, guys, to favor the long side on the broader scale for Sterling Key. I just think it was too early, Tuttle, coming into this region for me to start positioning for the rebound or positioning for the break. You just don't know. So I think today's giving us a nice definitive move here, and we'll have to see the close above, but looks good. Looks good. Tuttle says, yes, thank you. I was waiting for the pullback, and it never happened, and sterling dollar running way up, too, compared to Sterling Key. So the sterling dollar in this certain scenario, in this scenario right here, is still going to be my favorite play. So remember, guys, we were talking last week about 150.84, that darned level that never never gave us the rebound we were looking for heading into the start of the year. It's a basic 88.6 retracement from the advance off the 2013 low. It is also the swing lows from August of last year. And you had these nice slope barriers here, which have been catching sort of these sell-offs. Divergence into the low, momentum, higher low, price action, lower low, followed by a trigger break. I'll take these trades 9 times out of 10. Okay. Now this is a daily chart, so remember this is validating our broader bias right now, not necessarily on a scalp basis, but on a move like this, 9 times out of 10, like I said, divergence followed by a trigger break is going to be your best plays. So the focus is on this slope line right now, former support, now resistance. If we crack through, you look for a rally into like 52.67, 52.60 here initially for the pound. Eileen, great question. Great question. So it says, so now that the pound broke the levels and triggers, how to know how far to wait for the pullback to enter? Good question. You don't do that on the daily, right? This is helping us ascertain our bias. Remember, this is based on the closed. So in fact, you can't operate on this type of signal here. This is more of a tell than necessarily an actual trigger. Let's jump into the near-term charts and get this worked out. Okay. So on this type of trade, Eileen, this would have been the trigger. Okay. Why? Why is that the trigger? So you're coming off 150.80. Remember 150.80 is the major level that we talked about that we want to stay constructive above. It's highlighted right here. So right off the bat, last week, if you guys remember in Thursday's webinar, we said if Sterling is able to hold above 150.80, I don't want to be short. I'm looking higher. So we're back above 150.80, so right off the bat, you have a very good, strong threshold that you're looking to invalidate your long side bias. Cool. Looking for long side triggers. This is a 4-touch trigger, validated, and it broke right after a reversal at 50. That's a tell too. Now let's say Mike, you know what, that broke, like, it was a stretch. I don't know if I can take a long here at 150.90 against the lows right into resistance. You're absolutely right. I wouldn't have wanted to do that either. But this break now validates a break of the European opening range high. So on its face, in and of itself, on its own standalone strategy, a break of the European opening range high has us looking higher. Right? So on this break right here, that's where you'd want to jump into the position. Where's the entry, Mike? How do I know how far to pull back to get in? Ideally, after a break like this, you want to wait for a pullback into that same level. Don't always get it. This is where the near-term chart comes in. Okay? So there was the break. It took you through. This pullback right here came and found support right at 60. That's as bullish as it gets. And the rally took you right to the top side here. So for this type of positioning, trying to figure out what the actual trigger would have been. If you missed this one, it would have had to been the pullback here, and then the push through 51.85 against this dip. You have to be really. Let me take a step back, guys. If this looks like it's a risky type of trading, it's because it's always going to be more risky to buy a break of resistance than it is to sell into resistance for the short side. It's always going to be more risky to sell a short break of support than it is to buy a pullback coming into support. Do you know what I'm saying? So on these types of plays, guys, if you're trying to play the breakout, you need to be super nimble. You need to be super nimble. And when you see a momentum break like this, if you miss it, the pullback didn't get you in on the break right here, your stop needs to be right against that last swing low on a type of play like this. Okay? Now, guys, this is right into the open of actually, this is ahead of the open of the U.S. futures market, so it actually would have been a decent play. Eileen, does that walkthrough sort of give you a better picture? She says, I would have been looking for shorts back then. Let me ask you a question. What would have prompted you to look at a short on a play like this? Right? A clear break of the opening range high, Eileen, for Europe means you're constructive above 51.15. Right? Let's take a peek back at that daily chart. It's also important to keep in mind the broader picture. Eileen says, at that break, yes, looking higher, but the earlier break before resistance. The earlier break before resistance. Oh, this one. Is that what you're talking about, Eileen? This would have had you short? I have to fight myself over following the trend, but don't catch knives. Eileen, yeah. This is why we wouldn't have taken this short, Eileen, is because we highlighted 150.80, right? So yeah, even if you get a short trigger, it might be you might be inclined to take it. But remember the broader picture. Am I going to take a short right above 50.80, the level that we've been talking about for the last couple of weeks, as a level of which we want to see hold for the sterling? No. So the broader picture is always important. You know what I mean? And as a trend gets into a major support barrier, the inclination in and of itself is to start looking for the long side of the trade. So that's all I'll say on that. Plus, you had the divergence here in momentum with the low that we made. This is into Friday, even ahead of this week's price action, Eileen. Divergence into the lows here, right into that trend line, has us automatically looking for this trigger to give out. So we always got to make sure we have that broader picture in view. You got to take a step back, Eileen, and check out the daily chart, right? In fact, for the Aussie dollar, this was a case that, kept us out of a good trade. And it's not always going to work on a trade like this. There was many triggers that gave out as this thing headed into 80.65. But you're not going to see me selling into support. No way. No way. I'd rather forego this decline here, wait for the conviction trade, than to try to sell into support, because 9 times out of 10, it's going to be a very, very frustrating endeavor. Let's just say that. All right. Eileen says, yep, the broader pick and the rest of the complexities. Yeah. I mean, I don't want to complicate it for you, Eileen. I'm trying to make things as simple as possible, but we just got to keep in mind the broader trades that we're in. So, in fact, we've been looking for sort of more conditions of some sort of low being put in place. 50.80, been very, very, I definitely wouldn't want to be taking shorts into 50.80. So I hope that offers some clarity here, guys. By the way, as we go through these, guys, questions, trade setups, do feel free to throw them on the message board. We still have a good 20 minutes here before we have to wrap things up. All right. Sandeep says, can we check out the Euro Aus? Thinking of playing the short side around 143, considering the back and forth movement lately. Sure. Euro Aus. Well, before that, Sandeep, let's just go ahead and cover the euro dollar. Eileen's looking at that as well, so that'll give us a better picture of the euro dollar. So the euro dollar finally making a move. I appreciate all your tweets, by the way, about that about that late Sunday tweet. So if you recall, on Sunday, I threw out a tweet real quick right after the Asia Pac Open saying, guess what, guys? That low we just made at 110.95 represents a 100% extension from the decline off of the 2011 highs and the confluence high in 2014. The 100% extension came right there. On a broader view, a Schiff-Andrews pitchfork formation off that same high has the lower median line parallel right around that region, just above it. Okay? So yesterday's rebound, and we went over this in the webinar, you can see the archive, when we went back through 121.13, you said, you know what, as long as this stays above this trade, you're looking higher in the euro. You're looking higher in the euro. This was a major, major confluence Fibonacci level. 112.13 is a 2618 from the decline off the October high. 112.23, okay, is a 618 retracement off of the ascent. from the 2000 low. So if you take a step back, 110.95, I've identified that level as something we need to be watching. 112.23, that's a confluence level with that trend line. Well, guess what? If we pop back above that, we're looking higher in the euro. And I think that's what you're seeing right now. Okay? Now, the conviction for this starts to kick in. Yes, you did get a trigger, but these triggers with 2 points of reference are never going to be never going to be super strong triggers. You're not going to really want to stress these as much. Also, one thing I want to note is triggers that give out guys sub 30 and above 70, below or above the extremes, are not going to be triggers I'm going to want to play with. They're not going to be conviction triggers, right, that you want to put a lot of emphasis on. So for me, the break above 30 here will validate a near-term reversal for the euro. That low that we talked about on Sunday, as we tagged it at 110.95, is still critical support, and that, my friends, is going to be the continuation. Once we see a break below 110.95, you look for subsequent targets. There's really nothing until 108.90. Our bullish invalidation level near term remains at 112.13, 112.20. So as long as price stays above that, I favor buying dips in the euro dollar. All right, let's look what the near-term chart looks like for the euro. This might look familiar for yesterday's proposed pitchfork that we added on. If you recall, yesterday's pitchfork, guys, was a little bit different. We were looking at this one. Okay, price broke through that low. We held that 112.13, 112.20 level. So a quick adjustment to just match up the reference points actually gives us a really nice, accurate slope here for the euro. That looks a little like this. Okay, so near-term resistance, you look for the confluence of that right around 113.85, 113.86 is the 50% from last week's high, and it's also going to be that median line bisector. You stay constructive while above 112.30, 112.13. Looking to buy pullbacks. Here's a trigger that worked out perfectly, and this was a conviction trigger. Okay, why? Price action still above 40. You have 3 points of reference for the tags, and your stop couldn't have been cleaner. Okay, your stop is against the lower median line parallel. The bullish invalidation level is just a little lower, so you put your stop at 112.10, 112.13. You look to play the upside. Played out perfectly. Obviously, I did not take this position, guys. This was, during the wee morning hours here in European trade, but certainly a beautiful trigger to the upside, and you'll continue looking higher while above 112.20, 112.13. Questions on the euro? Eileen says you should rename those forks to MB pitchforks instead of Andrew pitchforks. Cheers, Eileen. Again, there's nothing magical about them, guys. It's just trend slope analysis. Something that me and Jamie do a lot. Pitchfork is just a way of combining all those together, but where it's basically a measure of slope is the focus here. Okay, so with that in view, constructive approach on the euro dollar while above 112.13, 112.20. With that view, my man Sandeep, here's what euro Oz looks like. Okay, so a trade that we haven't been too focused on. In fact, something that if you guys are really help out on trading the Aussie key looks super interesting to me. And we'll take a look at that in a moment as well. But looking at the Euro Oz, the focus, or the last thing I checked out on this was this trend line right here last week. Okay, we got a perfect tag of it on Friday. And that trend line dates back to the lows you made in 2012. Couple of the 2013 low. And it gives you this slope right here, which gave us the exact hold. I'm not going to stress this one anymore. The pitchfork idea is null and void. Okay, just cleaning this up a little bit. Give me 1 sec, guys. Okay. So here's what I would say on Euro Aus. I think actually you could see a nice rebound off this region. The one thing, actually you did get the trigger break. Okay. Right on. So this is what I want to say real quick about Euro Aus. I haven't really traded this the last couple of weeks, so Sandeep, I'm just going off the fly here. But this is sort of the progression of the trade. I interpreted this as the monthly opening range break. So broader bias, objectively speaking, heading into the end of the month, you're looking to stay on a bearish approach here below 143.85, which happens to be the exact 618 retracement of that advance. So here we are testing the underbelly of that with a nice rebound push lower. It really highlights this key range here, 143.85, right into the 140 handle. I know it's a massive range, but this is also a massive range scalp. 183 pips per day even surpasses some of the sterling crosses we were looking at. So long story short, a break above 143.85 does put me on a little bit more of a constructive path, but this is really the broader bearish invalidation level. This is going to be a 38.2 from the low, but more importantly, have the 200-day moving average, 1618 extension off the highs, and depending on where we are in the month, this is the median line off that high you made in August of last year that has been in focus for the formation that's currently in play. Let's see what this looks like on the near term. Sterling, this is Euro Aus. Here's the weekly opening range. Okay, we just saw the break of the weekly opening range right now, literally. Okay, so if this is the weekly opening range, here's your Sunday open. You set a low in Asia Pac. You push a high in European trade. You test that high again in U.S. You stay constructive above 42.50 near term. Watch that near term resistance 43.80 into 43.70. That's the level we just talked about. Interesting, interesting. Give me 2 seconds on this, guys. I will actually. It looks like you might actually have some nice, nice levels here. Sorry, guys, a little bit of a lag here on my end. Here we go. Okay, that's what I wanted to do. And let's see if there is any type of slope relationship here that we should be focused on. Ooh, look at that. She's a beauty, guys. Testing the median line right now off the lows they made for the month. Thanks for bringing this up, actually, Sandeep. This is actually a beautiful setup. Give me one moment, guys. Have a little bit of a lag here. Just going to free up some RAM. Okay. Yeah, that's the setup I'd be focused on. I do like it. I also want to do a quick adjustment to the retracement to take into account the low that we just made late on Friday. Looks pretty good. Looks pretty good. So, near term, heading into the open of the U.S. trade session, which is just under 12 minutes here, you get to stay constructive above 42.56. Bearish invalidation is the opening range low for the week, which is the 41 handle. A break of the lower median line parallel here in blue puts the focus back on that major key support right at the 140 handle that we talked about on the daily chart. Really nice. Really nice. As always, guys, don't forget, if you would like to save a copy of any of the charts or the analysis that we do here on the webinars, you can always click on the camera here in the top right-hand corner of the GoToWebinar screen to save that for future reference. Not bad, Sandeep. Do you have any questions on this? It says you're playing the short side around 143, considering the back and forth of the movement lately. You know what? I would have said that if you were talking about playing this range. When the market sets a predetermined range, you want to sell at the highs, buy at the lows. That makes sense. On a break like this, where it just cleared the weekly opening range, I'm not going to be necessarily looking to play that one. Does that make sense, Sandeep? This move we just made broke off, took the tops out. So we might see a little bit of recovery here. If it gets back below 42.60, a stop against that to play the range into the low makes sense as a scalp. But specifically if we hold above 42.57, you know, this actually shifts the upside bias for the trade for the week, Sandeep. So definitely keep that in mind. He says, yes, thanks. The range low would be still 141. Okay. The bullish invalidation would actually be the lower median line parallel. Sandeep, does that answer your questions? He says, cool, thanks, right on. Eileen says, Euro Oz, wait for the pullbacks to get long like sterling dollar did. Yes. So you don't want to be doing anything right here, Eileen, per se. This just broke 60. You just tagged that median line off the lows. You wait for a pullback and see if you can get long triggers near 42.50. If this breaks, you might just see a run into this level, guys, and that's not going to be a play for us. The upside trigger that we had, or the upside trigger that would have been in play on this setup, would have been that. But even on a trade like that, this was a perfect long, even if you wait for the next candle, long at 141.70 against 41.40. Okay, you're looking for 30 pips stop. Remember, quarter daily TR is 46 pips. That would have been an operative trade. Why? Because the trigger break was actually followed by a 50 break right through. Even on this setup, guys, my limits would have been at 42.57. I would not have been in this trade for the outside break. Why? Because the opening range for the week was still intact. Once that breaks, then I'll look to initiate a position, take a quarter off, bring stops up, take another quarter off, bring stops up. But as long as you're trading within the opening range for the initial week, that is not where you want to start, scaling out of a position. That's typically where I'll be all in, all out until we break that opening range. Does that make sense, guys? I hope that offers some clarity. But the momentum signature here looks constructive from here on out. You did see that hold 40.60 early in the week, but 40 hold followed by a 60 breach. And if we hold above 42.57, we'll look to play the long side here. Not bad. Not a bad setup, Sandeep. I like it. We'll tweet this trade out, or we'll tweet this scalp chart out on SB Squawk once we're done here. So that is the Euro Oz and the Euro Dollar. Euro Dollar really broke, says Eileen. Yes, right on. Okay, so 113.87. If you're holding longs, like I said, this is the first area of which you'd start to clean up the table a little bit, right? You want to clean up the books, maybe take some off the table, a quarter of the trade, half of the trade, a third of the trade, wherever your risk tolerance is. You're going to bring your stops up. Next topside objective, if you do break this 114.56, is going to be pretty big as well. But just keep in mind this median line here for the euro. Not bad. Not bad. Now remember where we are in time. Again, we're just heading into the open of U.S. trade in 8 minutes, so let those opening ranges pan out. Bottom line, you stay constructive above this low right here, which coincides with the lower median line parallel. All right, Eileen says wasn't in it, missed it. It's going to happen, Eileen. Don't kick yourself. It's going to happen. We are still holding that Aussie Cad position. That one is about 17 pips in the money at now. We'll see how that pans out. Here's what the Aussie Cad from earlier in the session looks like. We are below that formation, and we just want to see this thing close, or continue to close these candles below 98.86. Like I said, you're struggling here at the European opening range low, but I do think we'll get that crack as we head into U.S. All right, so those are the setups that we followed from the last update on the scalp page. The last thing I want to go over with and just touch upon is gold. Guys, we've been following this one and tracking this one like clockwork. The major rally into the key resistance region that we noted on Friday, both the upper median line parallel of the formation off of that November low and the 786 retracement off of the decline from the July highs. Really well. You got a downside trigger break here. I think this gave out, might have been yesterday, not Friday. But we looked for a pullback. Initial support target is 1280. The bullish invalidation is still 1262, 1268. Mike, what does that mean? That essentially means, guys, that if this thing pulls back, that's an area of which I'm starting to look for long triggers. I'm starting to look for entries on the long side. And if it breaks sub 1262, I'm out. Okay, a move sub 1262 here in gold is going to invalidate that trade. Such a scenario, you're looking for a pullback towards 1250, you're looking for 1237, the lower median line parallel of the ascending formation from that November low. Okay, so it's still a bullish trade. No one's going to argue that. No one's going to dispute that. What we warned about on Friday was the resistance target that you're into. We're looking for 1280. We're looking for 1268. As long as you stay above 1262, the long side of the trade remains well buoyed here. All right. So, guys, those are the setups I'm following on the near-term intraday trade basis. If you guys have any specific questions on strategy, pairs you're looking at, please feel free to throw them on the message board. We'll take a look at them before we close things down. We are buried here in New York, but everything is going to be as normal this week, guys. So we will have another scalp webinar tomorrow and Thursday morning at 8:30 Eastern. Obviously, tomorrow at 1 p.m., you do have the midweek strategy session with Jamie Setley. But don't expect any interruptions to our flow here. Okay, and it looks like Aussie Cad finally made a break of those lows. It's going to push, now pushing 98.76 here. Again, remember, initial targets, you might see some struggle right here at those highs from yesterday, but the initial objective is essentially 98.40. If we get through this with some conviction, at this point is where I'll start bringing down the stops, guys, to break even and see if we can get that last stretch. All right? So if there are no other questions, guys, we'll wrap it up there. Best of luck trading. As far as the economic docket is concerned, here's what we're looking at. There's really not much on tap until tomorrow as far as major event risk, and that's going to be the FOMC policy decision. Again, we'll give you a quick preview tomorrow morning before that release, and we'll definitely be in focus with the dollar crosses as we head into that print. Guys, best of luck trading, and I will see you all bright and early tomorrow morning for another intraday trade session. Cheers.